Hello friends. Friends, we are going to continue with the topic of ratio analysis, right? And we have started with, under ratio analysis, we have started with solvency ratios. And under the solvency ratios, we have so far covered two ratios. One is debt to equity ratio, where we studied the relationship between debt and equity. The second was total assets to debt ratio. Total assets to debt ratio, right? Where we studied the relationship between total assets and the total debt of the business. And when we talk about the solvency ratios, we only talk about long-term analysis, right? We talk about the long-term analysis. Clear? Now, in this lecture, we will talk about the third kind of ratio under the solvency ratios only, that is proprietary ratio. Now, the first and the foremost thing, what are the two financial factors in the proprietary ratio about which we are going to study the relationship? What are the two financial factors? From the name itself, it is difficult to identify the two financial factors involved in the proprietary ratio. So the two financial factors that are involved in this is proprietors funds and total assets. So the first of all, what we have identified is what are the two financial factors between which we study the relationship under proprietary ratio. It says the first is proprietary funds and the second is total assets. What are proprietary funds? Proprietary funds are owners' funds, right? So that means what we are going to study is the relationship between the owner funds and the total assets. Now, what is the relationship that we have to study, right? The relationship in this is very simple, that how much of the total assets are financed through own funds and how much from borrowed funds. What it means? How much of the total assets of the business they have been financed from our own pocket rather than borrowing the money from the market. If you have purchased a machinery worth rupees 10 lakhs from own funds, is it good or not? Take an example. You have purchased a machinery worth rupees 10 lakhs, right? Now, there are two scenarios. Either you will buy this from your own funds or you will take a loan or borrow money. Now, which is the cheaper option, own funds or take a loan? If you take a loan of 10 lakhs, you will pay interest on that. So net cost of the machinery will be 10 lakhs plus interest. And if you have borrowed it from the own funds, what will be the net cost? 10 lakhs only. So which is the better option? Own funds, isn't it? So why it is important to understand this ratio, proprietary ratio, we have to identify that how much of the total assets have been financed through own funds. If more of assets have been financed through own funds, then that means the position of the business is quite good, right? Business is able to generate sufficient profits, and through those profits only you have invested in the assets. If the business has not earned sufficient profits, if the position of business is not good, so what will business do? Business will borrow money from outside and take an asset, invest in the asset, right? So it is important for the business to identify that how much of the total assets have been financed through own funds, proprietors funds, and how much from the borrowed funds. Clear? So what are own funds, or I will say what are the proprietors funds? So first of all, I will say proprietary ratio, it is the relationship between proprietors funds divided by total assets. Clear? Proprietors funds divided by total assets. How much of the total assets have been financed through own funds, and how much of the total assets have been financed through borrowed funds. This is the main purpose of calculating proprietary ratio. Now, talking of proprietors funds. How to calculate proprietors funds? There are two approaches. One is liability approach and the other one is asset approach. Right? Liability approach is shareholders funds. What is shareholders funds? Share capital plus reserves plus minus surplus. Why minus? If it is a loss, it will be subtracted. If it is a profit, it will be added. So this is the liability approach. If you are given share capital, you are given reserves and you are given surplus, you can calculate the proprietors funds. And what about the asset approach? Asset approach is total assets minus total debts, or I can say, I'll further break this formula. I'll say non-current assets plus current assets. This is total assets minus current liabilities minus long-term debts. Clear? So if you have to calculate the proprietors funds, you have two approaches. Either you can go with the liability approach. In the liability approach, you will take the share capital, the reserves and the surplus. And if you are going for the asset approach, then you will calculate total assets minus total debts. Clear? I have further broken this formula into two parts. Total asset consists of non-current assets and the current assets, and total debts consist of current liabilities and the long-term debts. Clear? So in the proprietary ratio, the two financial factors are the proprietors funds and the total assets. Proprietors funds, I have told you how to calculate. Total assets, very simple, non-current assets plus current assets. Clear? So if we talk about this proprietary ratio, I can say higher the ratio, better it is, because if more of assets have been financed through own funds, that means the position of the business is quite good. Business is able to generate sufficient profits, and from those profits, right, the business is able to finance its assets. Profits belong to whom? The proprietor. That is added in the proprietors funds. So if the business is generating sufficient profits and is able to finance the majority of its assets from those profit, that means the proprietary ratio in that case will be high, and that is a good sign for the business, right? So this is the main motive behind calculating proprietary ratio, to identify the long-term position of the business in relation to the total assets being financed from own funds and borrowed funds. Clear? So let's do one practical problem on this. From the following information, calculate proprietary ratio. Shareholders' funds, equity share capital, preference share capital, reserves and surplus, non-current liabilities, debentures, current liabilities, trade payables, non-current asset, fixed assets, 1,25,000, current assets we are given, right? So now, for the proprietary ratio, we need two things. The first, we'll calculate proprietors' funds. Now I told you, for the proprietors' funds, we have two approaches. The first one is liability approach, right? So for the liability approach, we need share capital, reserves and surplus. We need three things. Are we given these three things? Share capital, yes. Equity share capital of 1 lakh and preference share capital of 50,000. So what is the share capital? Share capital is 1,50,000. What are reserves? We have reserves and surplus of 25,000. So we are given this combined as 25,000. So what are the total proprietors funds? 1,75,000. Now let's see the asset approach. For the asset approach, what we require is non-current assets plus current assets minus current liabilities and minus long-term liabilities, right? So we have the non-current assets. We are given the fixed assets of 1,25,000. 1,25,000. Current assets. Current assets, current investments of 75,000, cash and cash equivalents of 40,000, and other current assets of 10,000. Clear? So this all comes to 1,25,000. Clear? Now, current liabilities. Current liabilities is trade payables of 15,000. You have to subtract this, and the long-term liabilities, or we can say non-current liabilities, we have debentures of 60,000. Clear? All the figures covered? Right? So out of 2,50,000, what we are going to subtract is 75,000. What we are going to get is 1,75,000. Clear? So see, in both the cases, whether we go by the liability approach or whether we go by the asset approach, the proprietors funds will come to be the same. So you can calculate from both the approaches. Even in the exam, you can show as a working note. Both the approaches you can show in the working note, not an issue. Right? You will show the liability approach if you are given the information. Depending upon information, you can show both the approaches, liability approach and the asset approach. Clear? Now, what about the total assets? Second component. Total assets means non-current assets plus current assets. So you have non-current assets of 1,25,000 and you have current assets of 1,25,000. So the total assets are 2,50,000. Now you can calculate proprietary ratio. This comes to proprietors funds divided by total assets. Proprietors funds are 1,75,000 and the total assets are 2,50,000. This comes to 0.7. Now, what is the interpretation? The interpretation here is that 70% of your assets have been financed through own funds and 30% from the borrowed funds, which is a good sign for the business. You can write down the interpretation. Let's write it down. This means that 70% of the total assets have been financed through own funds. Right? So this means 70% of the total assets have been financed through own funds, which is a good position for a business. Right? That means the business is able to generate sufficient profits to invest own money in the assets. Clear? So friends, this is about the proprietary ratio. That is the relationship between the proprietors funds and the total assets. How much of the total assets are covered from the proprietors funds, are financed from the proprietors funds, and how much assets are being backed by borrowed funds. More the assets covered by proprietors funds, the better it is for the business. Clear? So friends, in the next lecture, we are going to cover the next ratio, that is interest coverage ratio. Under the solvency ratios only, this is going to be the last ratio under solvency, that is interest coverage ratio. So friends, if you have any queries, just send me an email at ksjteaching@gmail.com. Right? If you have any queries, if you have any questions, just send me an email and I'll try to answer back that email as soon as possible. Right? You can send me the pics of the questions if you are unable to solve any questions or if you have any doubts related to the topics. So that's all for this lecture, friends. Thank you so much.